All right. So hi everyone. I'm Julian, co-founder and CEO of idOS. And we are using the Consortium Forum to update you on, what has been happening in the idOS universe, what new features we ship. And today I'm quite excited because we have Axel here from Kulipa and Nick from Noah, two of our partners that will talk about what they do and what they think about identity later on. Maybe let's jump right in. We've seen that there have been in excess of news in the last couple of weeks and months, and I was finally seeing the stable token economy, however you want to call it, OpenFi, NoFi. We had quite some discussions about it. But the main thing that's important is it's really finally taking off. And you can actually also see that in the numbers. For us, obviously, it's quite interesting to see not just how the stable token volume is developing, but also when it comes to users. That's something where we've also seen quite a trend, 40 million active wallets. That's a pretty intense growth. Some comes from new wallets, some comes from people actually moving on-chain. And I guess this is the big bulk of users when they talk about crypto. They are still on centralized exchanges. And I think most of us that are on the call or might be watching have a pretty avid interest in changing this and bringing those people on-chain. I'm personally extremely excited about the crypto neobanks, where we have some veterans from fintech here now building on stable token rails, and these guys want to actually have traction, have users, want to change things. They're not just here because of the ideology, but because you can do something that you couldn't do before. I'm really excited to see what Axel and Nick have to say on that topic. From our side, of course, one of the big hurdles that we're seeing is that we need to be at par with normal neobanks, where users onboard once and then they can use all the different products that are available in a bank, right? That's something that people expect. We have a huge advantage that we are that we have different financial modules that we can just plug and play that work worldwide, where you can have the best provider, maybe even implement multiple providers. But with one big disadvantage, which is the user onboarding. So when we're talking, we internally call this KYC orchestration. If you are a self-custodial wallet and you want to onboard users, you basically have the choice to onboard the user to each and every financial module, each on-ramp, each card, each remittances provider, or you onboard the person once and then build pipes yourself to port it over. And obviously this is something that we as idOS want to solve. We've had a bit of a stealth launch, and I want to change that to actually show you how the idOS looks like. What we're doing is a fully compliant end-to-end decentralized user onboarding and data management solution that actually works. And with that, I mean also from a compliance perspective, that you as an obliged entity, as someone who has an obligation and will be liable for these things, can sleep well at night, because we, for example, have a legal audit from Taylor Wessing that Marjorie organized and prepared and built in the last couple of months, where we have people like Marjorie that have a legal background, that are lawyers, that are also part of the product and engineering team, right? Because we do engineer idOS with that in mind. How do we store user information in a data privacy preserving way? How can we actually port user information in a safe way? How can we store it that they know that it can be deleted without infringing on obliged entities' necessity to keep them secure for the time being when they have an active relation. So without further ado, I want to jump into the demo because then you can actually see how it works and that it works. And I prepared first a neobank demo that is just a test account here, but there's a new feature that I want to show you. So I am connecting any wallet. As you can see, there are multiple ways how you can actually connect. Usually the neobank wouldn't just throw someone into a KYC process or onboarding process. That's obviously something that we are doing just to jump right to the chase. In this case, I want to show you how the onboarding works, obviously. And there's something that is a little bit different because just like neobanks have a great advantage of being self-custodial, not just for the users, but also for themselves. We're applying the same concept to data. So people are in control of their own data. There's something that is new that we just shipped, which I'm quite proud of, which is a little bit technical, but we implemented MPC, so multi-party computing, for the abstraction of the encryption-decryption key pair. Because you need to authenticate yourself, obviously, and that can happen with mostly any wallet. But you can obviously not get the private key from that wallet, rightly so, for the decryption operation, right? So without kind of not having to use a password, we can now just use MPC, authenticate ourselves against the MPC network that is in the idOS or part of the idOS that we have built together with our good friends from Partisia, and set up that key. So that key now lives sharded in the idOS. And that might be a demo, but the idOS account is actually now set up. So we're going ahead and identifying ourselves. Obviously, data needs to be in the idOS to be reused. So this is a sub demo. It could be a different KYC provider. We just chose them to have an ability to show you. I can also implement a sharing function if I already have an account to just kind of like fetch that data. In this case, I'm pretending that I do not have data and I need to set it up. And I want to show you like the full KYC process just so you see that end to end. Now that is just the normal KYC process, but the magic happens here because I am fetching the data now straight from the node. So this is a verifiable credential data set that encompasses the full identity data, has been ported to be a verifiable credential in the W3C standard and encrypted with the user key that we created using MPC. Now it's in here. So this was the process, but now what can you do with that? Well, you can now click yourself a card because you can claim your card and you can onboard. So this ACME card provider might not have a connection with the neobank because they're two different legal entities, and usually you would now need to onboard again, right? And before I show that to you here in a mock neobank demo, I would like to actually show that to you how it works in the wild. That doesn't look great. This is just an engineering demo, but it has the advantage of actually being connected to some of our friends. And again, just logging in. And you can see here that we got a couple of different vendors. For example, Noah. So I can now click on Noah. And of course, that would look a lot nicer in this case. I still need to enter my password because I pre-prepared this account yesterday, where MPC wasn't a thing yet, to unlock the data, because otherwise, I might be able to get the data, but it's still encrypted with my user key, so no one can actually access it. So I do need to enter my password or authenticate myself against the MPC nodes to get it. Now it asks me if I want to share it, which I just did. So in the background, there's an operation going on that actually ports this data so that the good folks at NOAA can actually have it. And now I'm good to go. And I could just click on Hi-Fi to be able to on-ramp or pay, transact, same thing. And, in the next couple of weeks, we'll be busy just extending that. The cool thing is that this doesn't just work with my Samsung process, because some of those folks are actually not using Samsung. So you might ask, okay, how do they solve that now? And the answer is because we have this standard, a verifiable credential standard, and we know how we are able to pass it so that also other KYC providers can receive that data and port that into the systems. Ideally, we would love to see people storing things in the idOS and use reliance models, because that is the most data minimalization approach, to not have it in the KYC providers, centralized storage, again in the obliged entity storage, and in user self-custody, but only in user self-custody. But for the time being, we want to be flexible to give people the comfort of having multiple ways of how to solve that. So yeah, this is basically the product as it is today. There will be a couple of new features coming up in the next couple of weeks that I'm quite excited about, specifically when it comes to biometric signature processes. And that also kind of highlights a little bit why it's a good idea to not build your isolated identity stack. Because it's not just about like setting it up and having your product team and a couple of engineers busy trying to kind of like do the same thing that everyone else also needs to be doing, and maintaining it and keeping it secure, but also knowing what's out there and kind of like discovering all the cool things that are there to be able to implement it. It's a full team's work, I can tell you that, and this is what we kind of want to take care of for you, that you kind of have an identity stack that grows with you. So without further ado, I want to welcome Nick from NOAA and Axel from Colipa, and I'm gonna stop sharing my screen because I want to hear from you guys. Maybe have a quick presentation to present to folks what are you doing, how do you see the stable token economy, how do you view identity, and after that we will jump right into a discussion and Q&A. So if you have questions, please remember, write them down and ask them later, because this is supposed to be an interactive community session. So Nick, over to you.
Awesome. Yeah, thank you so much for the intro. So maybe just to give the audience a bit of background as to where we're positioned in the market and why this solution is relevant to us. Essentially, we're a stablecoins payments infrastructure between the stablecoin and fiat rails for both on-ramp and off-ramp. And the infrastructure and sort of positioning comes with the ability for our partners to embed our product in either a hosted sort of widget context or an entirely sort of white label context where the payment flows are implemented as a deep integration into their system and into their services. Now, historically, we started from a position of initially operating exclusively with financial institutions. So we were working directly with licensed and regulated entities where we would onboard and operate in this form of reliance model, with this integrated party in between, and us receiving KYC data, for example, on an end customer. And that was a really nice experience in that there was no need for the consumer to have any further actions other than having their data sent over to us and perhaps consenting to that data being sent over to us. Now, where we're seeing a lot of traction and where we think the market is really growing is, as you said, in the emergence of these on-chain neobanks, especially from a perspective of every wallet having some sort of traction or movement in the direction of becoming an on-chain neobank. And as part of NOAA, what we chose to do there was to allow these Web3 native applications to leverage our licensing stack. And with that comes a big distribution problem in terms of the differences in compliance stacks, the differences in requirements for any entity that you would, for example, onboard to within NOAA. And that's where we were calling out for a solution like idOS, for example, to sort of bridge the gap between our compliance requirements, our KYC requirements, and really solve the UX hurdles for these wallets that sit as integrators between us and the end customers. So how it sort of looks is the challenges that we encounter is there's several ways to sort of approach this solution for us. One is to enable a hosted onboarding experience. So we render our KYC flow in a widget for the customer to embed into their wallet platform, for example. And the downside being that will then need to be branded and customized to their experience, which can take slightly longer in development. And for any integrators that prefer an entirely white labeled experience, then that's not something they can approach with that solution. So we look to sort of pass through KYC models, and with certain compliance requirements like proof of liveness, for example, that's attainable to some degree where the vast majority of the data is collected and shared via API directly to us in a seamless manner. But that doesn't circumnavigate the requirement for us to display some form of widget to essentially collect the proof of liveness check, the circular face movement that we saw Julian make in the session previously, which is where we really look to a solution like idOS to solve those hurdles for us, and also to enable the user to own custody over that data for access to NOAA through these interfaced integrators. Now, the UX solution that solves is firstly for our compliance team being able to define requirements based on the entities that we have. So we have entities across Lithuania, we have entities across the US, all of which have differing levels of KYC that we need to collect on the end customer. And yes, KYC share options are available through the existing providers, and there's a lot of innovation in that field today. But to have a seamless experience where all parties can communicate without an underlying shared KYC platform or provider in between is not something that we've managed to find or solve for with a solution in between. So for us, the interoperability and the access into for our integrators to onboard their customers in any regard really solves this distribution problem of the nuances and the discrepancies between KYC requirements, but also the requirements of the underlying entities on our end as well. But I'll take a pause there in case, Julian, you have any questions.
No, that's great. Thanks, Nick. I would say let's go ahead, Axel, if you want to jump in, and then we go straight to the discussion with you guys also chiming in.
Yeah, sure. So CEO and founder Axel Gatland, CEO and founder of Kulipa. We do card issuance for self-custody wallets. So we issue Visa, MasterCard cards that enable people to pay in almost any merchant with their card in stablecoin or we haven't done it yet, but it could work it could work with any crypto. And one of the challenge, I mean, fully in line with Nick on the challenge of offering a decent experience. I think we come from a world, I mean, anybody who's being early in crypto comes from a world where it was so hard to make any transaction that just doing a KYC was not the biggest hurdle. But if we want to embark into the next billion users, we definitely need to fix that. And I think icon abstractions and all of the latest technology in terms of transaction have fixed some core UX problems. And I guess the next one that needs to be solved is just not having to KYC only once and being able to share that across the different providers that the wallets are using, depending on the region, depending on what they want to offer as products. I think it's going to become even more important now that you have more and more of these PayFi applications that are purely competing with TradFi fintechs, I would say, that are just working on remittance, payroll, all of these new types of stablecoin startups that just needs an experience as good as a normal fintech, and they should not be any compromise on the UX to be able to harvest the stablecoin, the superpowers of stablecoin, I would say. So that's for me one of the key drivers in the direction of the solution that idOS, or being able to share KYC is a must. And I mean, we had the same experience as Noah with like so many of these wallets that already were offering us to share, and they would be the one building that conversion between the data coming from one provider that they managed to grab and another one, and I think that just doesn't scale, and what every of these wallets have done once. And on top of that, it is not very secure because they have to touch PII data. They have, I mean, they do it in a very ad hoc way, which and they not always understand what they're really touching, and the fact that it's quite tricky. So that's I think also something, if we manage to have a standard that can set the bar high enough in terms of protecting that data, that the whole industry will benefit from that. And overall, I think we also see a transition where every single fintech is now that Stripe is jumping right into stablecoin. All of the fintechs are now looking at stablecoin like, oh, maybe we missed something, maybe we should go into there. And if they have to have 5 KYCs to reproduce the level of services that they provide in the jurisdiction where they are already obliged, and they have to do a patchwork of providers in new regions, then that's going to be a killer for them. And so that transition into the normal world of users that don't come from crypto is, KYC sharing is an absolute must. So that's why we're super excited about being able to start using idOS and a standard way of sharing that data.
Thanks, Axel. I know you've been in TradFi and fintech heavily, actually. And there are two things that I wanted to ask. The first one is, when you're looking in the next 2 or 3 years or so, can you paint us a picture of where you think growth will come from, especially in terms of users onboarded?
Yeah, I think, that's funny. We were discussing that exactly before with the team, trying to identify the type of fintechs, the type of embedded finance where cross-border and where stablecoin was bringing the most value, to be able to see where this fintech adoption will start. And so I see mainly two use cases. I mean, there's definitely going B2C first, and then the B2C UX improvements are slowly going into B2B, and because people are used to Apple Pay, and then they want something similar into their jobs, and that's how B2B is catching up. But I've got the feeling that stablecoin and cross-border payments are very much something that the companies are more sensitive to. So I think there's a huge drive in B2B for this for the stablecoin usage, especially emerging markets where the payment rails. I mean, you probably all saw this the CEO of Airwallex making that comment about the fact that stablecoins are useless because they already have a solution. They have a solution for some of the corridors that they already manage, but I think that what stablecoins are bringing is a solution that anybody can use. Any new startup can be as efficient as Airwallex, which is 1,000 times bigger than them, and also on corridors that Airwallex didn't bother to optimize for. So I mean, for me, the emerging markets is an obvious one. We see so much traction in Nigeria, Argentina, where people want to have dollars, and it's a way for them to store dollars.
Talking about it, Nick, we just met each other for the first time in person last week. You were kind of like the star at the Opera MiniPay event. They are mostly catering to African users, as far as I know. Can you tell us a little bit more, like how is it kind of like open up payment rails in Africa? Is it still hard to do it? Does it just seamlessly work? Are stable tokens helpful, and how do they deal with identity there?
Yeah, no, it's massively helpful to Africa, especially the emerging markets within Africa, and the primary use case being access to dollars. So, for example, for the ability for a Nigerian resident to receive payroll and remittances from their friends and family in Europe or their friends and family in the US. That's the first and most important unlock for those with Nigerian residents, for example, to access US dollars, to not have to deal with the volatility of their local currencies, for example. And the second unlock as part of the partnership being a payments experience tailored to the individual that may be accessing bill payments, for example, from remittances from their friends and family within the scope of a market in Nigeria or a market in Africa, Kenya, for example. So in that scenario, the UX that was proposed to us and the problems that we wanted to solve was very much around: you're a MiniPay user, you're on the ground, you need to make a bill payment, you need to make a payment for your groceries in person. How can you, with minimal information on the marketplace or the grocery store, facilitate a payment on the ground without needing to provide onboarding data on the entity there? So that's the problem we were set out to solve with Opera MiniPay. Really enabling a breadth of payments for the African markets, and also enabling them in a payments experience that's sort of holistic to what they're used to. So part of the unlock will enable MiniPay users, for example, to receive payments towards their bills from friends and family in Europe, friends and family in the US as well. And a very important in this scenario is to be able to handle the compliance and onboarding this individual in a way that's holistic to their crypto-friendly, crypto-savvy user who owns a self-custody wallet. Why should they have to KYC with every partner that for example, an application like MiniPay implements? Whereas if they could store that data and control that data via MPC, for example, then that would very easily be ported over to the range of payments partners that MiniPay have. So it's a payments experience unlock for the integrator, MiniPay, in this scenario as well, for a solution like idOS to come about. And the reason is that they can selectively pick and choose the best payment partners for the jurisdictions or for the payment rails that they're most interested in, without having to worry about the UX burdens of porting data between payments partners.
Yeah, Cool. Last question before I want to kind of open it up to everyone in this call. But Axel, you've been very much involved with Ready, formerly known as Argent. They didn't just change their name, but also completely doubled down on the neobanking experience. And you've got some experience there. And I'm curious, like beyond the identity onboarding hassle, where do you think TradFi or fintechs still have a leg up that we need to overcome before we can have a even better experience in like all those different categories?
I mean, yeah, indeed, Ready is definitely making that transition from being a very investment portfolio focused wallet to a crypto neobank, and what makes I mean, at the end of the day, what a bank is a store of value with like money being able to come in and out and in a very transparent and fast and smooth manner. So at the end of the day, what Ready is building is this connectivity of that self-custodian wallet into the local payment rails, and that will, because they're global, because they want to remain global. That means a lot of different players, because especially and Nick knows it probably way better than me, but I mean, we have an advantage that when we issue a Visa, even if we have to be regulated, or if we issue a MasterCard, even if we have to be regulated locally, the rails are the same. I mean, it's all one big network, and even if you have to be certified, if your connection has to be certified, and you have some small nuances, it's not like going from faster payments to Pix to a UPI to ACH to whatever it is in Argentina or Nigeria. So I guess that's one of the to fulfill the needs of these wallets. It will remain, even if the teams we are trying to cover the whole world, and probably the teams that know are also trying to serve the whole world. There will always be reasons to optimize certain payment rails in certain geographies that we will not be able to go in every single. I don't know if there's even a specific payment scheme in Kazakhstan or wherever, and I think it's going to be almost impossible for us to cover everything. So we need the wallets will need to, if they want to remain global, they will need to be an aggregator of providers, and all of these providers will need to have one element shared in common, two things to share in common: a stablecoin and the identity of the user. And I think that's what is going to be the key element of making these neobanks truly global and compete. I mean, and when you say truly global, it means that they're going to be able to compete with the largest neobanks quite quickly. And that's funny. We had discussion with the team at Revolut, and they don't seem to be very interested in harvesting the value of stablecoin for now.
Yeah, it's interesting to see how similar markets are when comparing the financial market to like the early social media market, where it's still pretty national, surprisingly national, or at least, regional. All right, let's open up for questions though. If there are any, feel free to jump right in.
The first one is always the trickiest.
it may be wishful thinking to extend this into business-to-business onboardings, at least while the consumer side gets to a point of refinement and adoption. But I think if I was to have a magic lamp that I could wish for something, that would be something that would at least having a portion of that data be composable and transferable in the same ideology and principles that are applied to your consumer ID solution, for example, to simplify business-to-business onboardings. That would be something that's a major unlock for all of the payments companies that, for example, working very closely together to onboard quickly and service unique payments experiences and use cases together. And so if Axel and I could work together in a way that's quick and efficient to onboard each other and leverage each other's strong suits in terms of the payment rails that they have, then that would be a big unlock for us.
And I think there are use cases where identity is I'm going to take an example. There's a big challenge at the moment in Europe for banks that have to implement what the UK has implemented forever, which is confirmation of pay. When you send money to across, you need to validate that indeed the IBAN of the counterparty belongs to the one you think it is, avoiding all of these frauds that are happening with IBAN spoofing and like, is it really Axel's? Some use cases like that in exchanging, because I would say KYC is a one-off and could be a very asynchronous way of checking identity, but I think there are more real-time identity checks that could be very, very much useful with if we manage to get the speed of the internet for this type of secured checks. It would be super useful. I love the idea of this credit scoring, because you could even have something that a contract somewhere that collects all of the credit events from all of the different entities and builds a credit score in a private manner without anybody holding it or anybody really, but all of the participants could build that centralized, that decentralized KYC, not KYC, but credit scoring. That would be immensely useful. But yeah, like the use case that we mentioned with key recovery, for example. If you want to be able to authenticate to your new phone and your new phone doesn't know who you are, and just checking that your face is indeed the face that was checked during the KYC, it's like an ultimate way of doing biometric without only relying on your phone and what's stored in your phone. So that's a transferable biometry, which I think is quite useful too.
Can I have a question a bit more practical? Like I think I'm fully agree with the problems and what this will unlock, hopefully. What do you guys feel is where idOS is today? What are the major things you guys are missing on the product side?
And I think not much. We had the discussion with so we are. I don't know how the meeting went yesterday, but there might be some first implementations going on, and I think the mobile SDK was the one that because a lot of these neobanks are mainly mobile apps, and I think that's one of the key elements for them to be able to orchestrate the sharing of information between the different providers. That's definitely one that I think is the small unlock that is required. We talked about credit scoring is there might be, identity is also your reputation, and it might be, because we're talking about a very KYC legal operation, obligated entity focused identity, but there is probably extensions in terms of the data that can be shared. This idea of I don't know if it's ZK or something, but being able to bounce a check at idOS package and say, is that person really Julian, or is it someone else? I think it's also just not sharing your whole identity, but being able to test something is, I think, something that could be quite interesting, like confirmation of pay in the UK. Yeah.
Do you think that's more like an idOS core product, or is it an opportunity for some other people to build on top of the network?
It could be both. Could be both. I think it would be very immensely powerful for idOS to open new use cases like that, and make it collaborative in a sense that new type of data could be shared and could be. But like, for example, if we imagine that your credit scoring is built by over time, you need a certain business logic in there to take all of these credit events in a way that creates. So yeah.
No, I like the idea. I'm just more like, sorry.
So I would echo what Axel is saying there. I have a perspective here as an analogy from the Web2 fintech world when open banking was launched, right? I think the early success stories of open banking came from not so much the what do you call it? The PISPs, the payment initiation service providers, that now everyone talks about enabling transactions, but it actually came from the AISP, so the account information service providers. And when I was at PayPal, the first really big use cases for open banking were exactly what Axel said, which was pay verification use cases, which were constantly utilized the open banking rails as opposed to a one-off initiation. And then secondly, there were like some bespoke credit information that was provided through AISP rails. So if you think about the analogy there, it's like, we clearly are not in a situation where we're pinging banks, but ideally we're in a situation where we're pinging, this decentralized storage, which contains the ability not only to do one-off KYC checks, but also constantly check on, I don't know, things like IBAN verification, credit information. There'll be like much more frequent use cases where we could poll the idOS protocol for information. And it was very much the responsibility of the AISP providers to actually enable those use cases in IBAN verification and credit information. Of course, there were applications that were then built on top of that would then take that information and use that for whatever payment or credit. But like, it was, the information shared and how the information shared and what specific information was shared was down to the protocol. In this case, AISP provided. So I think it's an interesting analogy to look at that traditional success case in open banking and say, how can we replicate, those use cases, but using an idOS protocol instead?
What I'm getting at is there's a directional thing for this community is that we're telling what we want and expect a small team to build this, or is it an open platform inviting a lot of people to build on stuff on top? And I've seen some L1s which were like, we don't do shit. Everybody needs, the community needs to step up, and that's hard in the beginning until you get this unlocked. Or you take the okay, we're hiring people and we're building everything, and then if something is successful, then we're building the same. And it's a very cultural question. Is this a core capability which will be provided from a small team, or is it a whole ecosystem where it's that team which is expected to do that? And again, I don't have the answer. I'm not sure what's the right thing. I'm more for like an open ecosystem grow together with many teams doing stuff. But yeah, it's just a thought.
I think maybe where we're landing here, Ruben, is it's supplementary data to the actual ID verification, right? Which, as you're saying, would benefit from this community input for people to find the use cases themselves and build them themselves. I mean, there's numerous that come to mind initially for just from thinking about the space that we're involved in, and you can take that, for example, to a perspective of applying this protocol to a terms and conditions scenario where there's some hashed and verifiable set of data that you can say this user at this time signed these terms and conditions, and that's stored against their profile, for example. But that supplementary data sort of goes to any lengths, and if that was open to a community, it'd be amazing to see what people would come up with, and yeah, maybe payments development teams would also contribute there as well.
I really love that discussion. I think next time I'm going to come with potential features that we see and just get your feedback here. I'm going to already use that ability now, because there have been a couple of things that we have been talking about. One is more from a data view kind type, where you would want to potentially have a dashboard where you can see all that data. I'm not sure how you guys handle that, if that's a self-made thing, if you're using existing centralized providers. You know, kind of pairing the fact of like not having a data honeypot with having the same ease of use of a compliance dashboard or something like that. And the second big one that keeps floating around is private yet compliant payments. So private mixers to obfuscate transactions, you know, with cards. Right now with self-custodial cards, whenever I'm spending a coffee, and you see that, then you have a pretty good trace of like who I potentially am and what other things I'm spending on. So those are the two features that we're seeing that might be interesting.
Awesome. Yeah, on the dashboard aspect, I think that's a very important piece to have for implementation into compliance teams, for example, that are used to having this centralized model, and having that at least mirror in a holistic way the features and functionality that they've been used to with the existing KYC platforms is going to be pretty important to familiarize them with this experience, I think. So reflecting on that data is going to be important.
Yeah, and I think there's another. I mean, one of the requirements with KYC is that you have to update it, and you have, depending on your risk level on that, it's yearly, but I mean every other year or every 3 years. So I guess there will be a need at one point to somehow moving. I mean, if we have a decentralized storage, we will need at one point to be able to present that data to the user again, and say, hey, did anything change? Oh, by the way, I need your new proof of address, or I need an updated ID because this one is expired. So there are probably use cases in that realm that could be quite interesting, because we will probably use our KYC platform to do this review of KYC and show that to the users. So there will be again an exchange of data that's required between the idOS package and our KYC platforms.
That's super helpful. Thank you.
Mhm. Yeah, and again, yeah, I guess the then the question comes is, do we store data, personal data or identity data, privately or public? I mean, in a sense that what do you want to share? What do you want to? Because I mean, I was doing there was some sort of parallel with with cookies, where you store things on a computer, and then when you come back, the user gets some level of personalization because of that. So I mean, the how far do you want to go in opening that network and that storage of data for either application for sharing or application for just storing for later use?
Yeah, I think striking a balance there is extremely important, but I think that is our core insight. Next to what Louis mentioned earlier, that it's mostly about you guys as the integrators at first. It is about the users, but you cannot just buy them. You know, if you buy them, you collect the exactly wrong users. You need to have the use cases. You guys need to love it, right? You're the ones that we're catering to while keeping the user secure, the user's data secure. But we feel that exactly the approach of it's either central or it's local on the local device doesn't work because of data availability problems, where 3 years ago we said, all right, let's toss all the other approaches. And we did them all, right? We had an identity wallet. We had a identity chain, a registry played with NFTs. Nothing worked. Data availability is where it's going, because that also means composability. And then really getting people on board because they want the utility, both from a user perspective as well as a client perspective, and then get builders to build the tools that you guys want to see. And that's what we have been doing. That might not be as public, but one of the core functions is made by our friends from Quill. Partija has helped us build state-of-the-art. These guys are doing most of equipping the Scandinavian governments with encryption and cryptographic scaling technology. They have helped us build the MVC network. And biometrics is maybe something we can talk in the next call and hopefully present. But thank you. Well, pretty much, yeah, Axel. You're on mute though.
I'm on mute, yeah. One last thing is, are there any, because the data we're exchanging and we might be exchanging has value. Yeah. So is there any sharing of value of way, I mean,
yes,
a way to somehow, because the one that did pay for the first KYC potentially wants to get a small revenue for giving it to someone else, and it would feel fair to get part of the revenue back for if you're the first one who invested in the first KYC.
100%. This is exactly how it will work.
Okay.
The idOS is a protocol with payment functionalities built in. This is not just for the payment of like the node providers, because they act as like micro AWS servers, where they store your user data and keep secure. But also on the payment side, that you can set a price, you can also update that price. So at one point, we hope that it's going to become a little bit more dynamic based on how valuable data you actually added, right? Because when I can convert you right into my product, where I'm paying $500 customer acquisition cost, which does happen, you know, if you're thinking about like some trading venues, you know, a 50% drop off in KYC results in a loss of lifetime value of maybe 10,000. So you'd be happy to pay 200 to just get that user onboarded. If you happen to have onboarded that user, set the price accordingly. I think that's fair.
Wow. dynamic pricing.
Yes. But for now, it's going to be free for the time being. So we're looking at probably Q4 to get the payment rails in place. Yeah.
Makes sense.
Awesome. This was amazing. Thank you so much for being here, Nick and Axel, but also everyone else for joining and for asking questions. And I see you all in 6 weeks.
Thank you.
Thank you, guys.
Bye-bye.
Yes,
Thank you so
thanks.
much.